Hello, welcome to the European Open briefing for Wednesday, April the 12th. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be taking a look at the latest developments in the currency markets today. So risk-off is still dampening market sentiment today. We're seeing the dollar at 5-month lows. There's rising fears about a possible war breakout in the Korean Peninsula following war of words between North Korea and the United States, and this risk aversion is obviously helping safe haven assets such as gold, which hit a 5-month high, as well as the yen. Although the yen has eased back just a little bit at the start of European trading, government bonds, especially US, European, and Japanese bonds, are also rallying due to the flight to safety. The euro and the pound, they're not doing too badly against the dollar, but they're struggling against the yen. And in commodities, oil is doing rather well. It hit a fresh 1-month high after Saudi Arabia signaled that it wants to extend the current output deal for another 6 months. So let's start with the dollar-yen pair. We can see that the dollar-yen broke below the key support level of 110 yen, which it had managed to hold in recent weeks. It's currently trading at 109.64. So that's the near 5-month low of 109.34 hit in Asian trading today. And of course, there's fears of a possible military action both in Syria and in North Korea by the United States. Donald Trump had tweeted yesterday that North Korea is looking for trouble, and if China isn't going to solve the problem, then the US will. And North Korea retaliated by saying that it will respond to any US action with a nuclear attack. And the reason why it's a very risky period now is because North Korea is due to celebrate the birthday of the North Korean founder Kim Il-sung on April the 15th, and the following week after there will be another North Korean celebration. So North Korean government may use these events to conduct another missile test. And with regards to Syria, the US Secretary of State is currently in Russia for talks over the situation in Syria following the recent chemical weapons attacks, and it'll be interesting to see what the outcome of that meeting will be. But for now, gold is of course seeing strong demand. It hit a 5-month high of $1,279 an ounce earlier today. The yen also made strong gains, also it's off those highs at the moment, and US Treasury yields are also doing rather well. US Treasury bonds, Treasury notes are doing rather well, and that's pushing down the yields to near last week's 5-month low of 2.27%. In European currencies, we can see the euro and the pound gaining against the dollar. The dollar, of course, is being weighed by the drop in US Treasury yields. The euro is back above the 1.06 level, but against the yen, it hit a 5-month low, 115.92. We have, of course, the uncertainty about the French elections. Recent polls suggest that Le Pen is back ahead of Macron in the more recent polls, although some polls do put Macron ahead still, but the far left candidate is a surprise benefactor from the latest TV debate they had between the French presidential candidates in France. He's been making steady progress since, and is currently in 3rd place in some polls ahead of Fillon, the conservative candidate. So that's weighing on the euro, and will probably continue to weigh on the euro at least until after the elections in France on April 23rd, and then in the beginning of May if it leads to second round, which it most likely will. The pound, though, is trading just below the 1.25 level, and like the euro, it did hit fresh lows against the yen. Yesterday it touched 136.51, or rather earlier today it touched 136.51. That's a 3-month low. Sterling was boosted by UK inflation data yesterday. Annual CPI in the UK was unchanged at 2.3% in March. That was in line with expectations, but there are this doesn't change the fact that the Bank of England will still probably have to raise rates sooner rather than later if inflation continues to stay above the bank's 2% target level. And that this brings into focus the latest unemployment data, which is due out later today. Particularly average earnings will be eyed to see whether or not they're creating any inflationary pressures. Moving on now to commodity and commodity currencies. Here we can see the Aussie and the Kiwi have been mostly range bound in recent days. The Aussie is stuck near 3-month lows due to a recent drop in iron ore and other metal prices and coal as well. The Canadian dollar is doing a bit better as it's being supported by higher oil prices. We can see that USD CAD fell at the start of the week and it's currently near holding around the 1.3320 level. So of course a drop in USD CAD means the loonie is strengthening, and the reason for that is of course the higher oil prices. US crude is currently trading above $53.50 a barrel, and Brent crude is above $56, and that's mainly due to, apart from the possible military conflict in the Middle East, Saudi Arabia is reportedly urging other OPEC members to back an extension of the current output deal that's due to expire at the end of June for a further 6 months until the end of the year, and that of course is helping the crude oil prices higher. Looking at today's economic calendar, we did have data out of Japan. Corporate goods prices were year on year were slightly better than expected, and machinery orders, although they were disappointing, it still shows that the underlying trend in Japan's economy is we're seeing strengthening, the manufacturing sector in Japan continuing to strengthen, or at least making some moderate recovery. So that's might have potentially added additional support to the yen. We had inflation data out of China. Producer prices were in line with estimates, whereas consumer prices were slightly below expectations. So there does appear to be some easing in the spike in producer prices we saw in China recently. Although the weaker figure is unlikely to mean that the Chinese authorities will loosen monetary policy there. On the contrary, they will probably continue to tighten policy at a steady pace given the high debt levels in the country. And the main focus later in the day is going to be UK unemployment numbers and average earnings. It's going to be another quiet session in the US with the main focus being on the Bank of Canada. That's where they're due to announce their latest monetary policy decision. They're expected to hold rates at 0.5%. But whether or not the Bank of Canada will give an easing bias or neutral bias, that will probably affect the Canadian dollar. But also to watch is the Bank of England Governor Mark Carney is due to speak at 08 hours GMT, and US President Trump is scheduled to speak on Fox Business Network in an interview that is expected at 10 hours GMT, so that will probably have some impact on the markets as well. That's it from me. Thank you very much for watching and have a great day.